Hello guys, this presentation is for LGT 5046, the contract management. The topic is a case study on Ministry of Power, ABC country for contract renegotiation with independent power producing companies, the IPP. Here's the information about our group members. Usman Ashraf, Li Yi, Yan Ziyi, Wu Pei, Xu Kaineng, and Wu Shuwei. And this is Xu Kaineng. And before the main body of our presentation, let me give you guys a brief introduction about our content. The first part is about the introduction and the background. The second part is about the reasons of renegotiation. The third part is about the renegotiation. The fourth part is about the strategies applied in the renegotiation. The fifth part is about the implementation plan. The sixth part is about the conclusion. And I will be responsible for the first part, which is the introduction of the case and background of Ministry of Power, ABC country, and IPP companies. The role play. This presentation is for Dr. Patrice Choi, the Secretary Power Division in ABC country, and the presenters act as a negotiation team of Power Division, ABC company. The objective of this project is that a renegotiated settlement, which will require engagement of all stakeholders with a view to arrive at an agreement, ensures that ABC country's power sector is financially and operationally sustainable in the future. The agreement is aimed at changing take or pay to take and pay approach to save ABC country nearly 28 billion rupees annually. And the issue of this project is that the electricity generation cost in ABC country is exceptionally high, affecting citizens and the economy adversely. And next, I will introduce two items: the background of the Ministry of Power in ABC country and the IPP companies. ABC country is a small developing country located in Asia, where the civil's electricity cannot sustain all day. The Ministry of Power takes charge of electricity management and aims at keeping the power sectors financially and operationally sustainable. They introduced their power policy and invited investors to get into power purchase agreement, also called the PPA, which was based on the single buyer model, means IPPs will generate electricity which will be purchased by government and distributed to end consumers. The IPP companies are the 12 independent power producers, which I will show in table 1, from all over the world, and they had already finished establishing the power sectors in 2010 to 2012 and signed 25-year to 30-year power purchase agreements, which supply for the ABC country's electricity demand. IPP have total capacity of 2,714 million watts. Here is the information. The table shows the 12 IPP companies, and they also show the capacity, the years in operation, the date of commencement year, the capital investment, the profit before tax, the dividend, and the payback period. And this table will give you guys a better understanding of our project. Next, about the reasons of renegotiation, and I'm gonna stop from here. My part.
Now I will talk about the reasons of negotiation. First is high generation cost and price. The country's accelerated generation relied on a fuel mix of approximately 30 to 70 in favor of hydropower versus thermal, which changed from 1980s to 2010. Thus, the currency devaluation and increase in oil price have highly influenced generation cost. Price of electricity raised as well. Second is industrial growth. High electricity generation costs impacted the industry and overall economy adversely. For industry revival and employment creation, the electricity cost must be decreased. Third is ABC government's inability to recover the full cost of energy production and incurring huge debts to IPPs. Last is inefficient design. In ABC country, oil-based power plants under 200 MW are employed to satisfy standard-based demand, while other countries close down or normally are used for load balancing, like matching sudden jumps in demand. Next, welcome my group member Usman to explain the problem with power purchase contract and their impact.
Hi Professor, my name is Usman Ashraf and I am going to explain the existing contracting terms with the IPP's companies and their impacts on the citizens of ABC country. According to the existing power purchase agreements, the IPPs are set up on build, own and operate model. According to this arrangement, the IPP's companies will set up their own power plants which will be owned and operated by them. They will generate the electricity. The electricity generated by them will be purchased by the government, and the government will distribute that electricity to the end consumers. And to pay back the IPP according to power purchase agreement, which is on cost plus return basis in US dollar terms, the government has to collect the electricity bill from the end consumers and pay back to IPP. So under power purchase agreement, there are two types of payment that are to be made to the IPPs. One of them is capacity purchase price. This is the fixed amount that should be paid in US dollars on the declared available capacity of the power plant, irrespective of the fact whether the plant is generate any electricity or not. This amount has to be paid for the declared capacity. In addition to that, this price also covers the fixed operation and maintenance cost, foreign fixed operation and maintenance cost, local insurance, debt services and return on equity. And other payment to be made to the IPP is energy purchase price. This is like a variable cost to be reimbursed to the IPPs, just like the fuel cost that is to be consumed by the IPP's power plants to generate the electricity. And this is to be paid in as indexed to the US exchange rate. Above all, the IPPs have been offered an internal rate of return of 15% in US dollars with the sovereign guarantee. These existing contracting terms with the IPPs under power purchase agreement, they have very drastic effects on the government and the citizens of ABC country. There are two main reasons for that. Number one is the devaluation of local currency. After 2008 financial crisis, the local currency depreciated exponentially with regard to US dollars. The payment made to the IPPs by the government, that should be in US dollar under CPP arrangement, but the bill collection from the end consumer, that is in local currency. So because of the huge depreciation of the local currency as compared to the US dollars, the government was unable to recover enough money to pay back to the IPPs. So this caused the huge debt for the government to the IPPs. The second cause is the increased oil prices. The sharp increased prices in after 2008 financial crisis led to the huge increase in energy purchase price. This resulted the overall cost generation of electricity by 148%, And to recover this cost, the government has to incur huge tariffs on the common citizen, which made their life quite miserable. So on one hand, the government and the citizens, they are suffering under these power purchase agreement terms. The IPP's companies are busy in minting huge profits because of these contracting terms. According to the recent inquiry report, the profits generated by the IPPs are as high as 18.26 times of the investment. The payback period for most of the IPP's company is 1.1 to 4 years, which is quite exceptional in commercial world. And the overall profit accumulated by these companies in the operation during their operational years of 8 to 9 years is 203 billion rupees against the combined investment of 57.81 billion rupees. And they also paid the dividend of 111 billion rupees to their shareholders, whereas the regulatory profit at 15% internal rate of return in US dollars works out to be 92.21. The main reason that IPP were managed to accumulate such huge profit is the depreciation of the local currency as compared to the US dollars. Apart from that, the inquiry report also mentioned that this 64 billion rupees of profit accumulated by these IPP's companies are from unidentifiable resources, means there is no record for this profit in their financial statement, cash flow statements or balance sheet. And it is highlighted in the report that these profits are generated through their malpractices and wrongdoings in over invoicing and misreporting and misrepresentation of fuel expenses and its consumption. So such irregularities are considered as the breach of contract under the power purchase agreement and considered as a fraudulent activity under the penal code of the ABC country. In this table, all the details for the IPP companies about their capacity, their years of operation, the capital investment they have made, and the profit they have accumulated over the years, the dividend they have paid, and the payback period of all the 12 IPP companies, it is represented in this table, and it shows that over the years they have accumulated huge profits over very little combined investment in power sector. Now my group member Zi Yi Hian will explain about the arrangements for the renegotiation with the IPP companies. Thank you.
Thanks, Wu Shimen and Wu Shuwei. I'm Yan Ziyan, talk about Part 3 renegotiation. There are two options which are considered for reaching the renegotiation to address issues mentioned above. First option is the preferred one. Both sides have a peaceful negotiated settlement which will require the engagement of all stakeholders to arrive at an agreement which ensures the power sector is financially and operationally sustainable in the future. Second one is the offensive one. The federal government can undertake a forensic audit of all companies with a view to establishing further wrongdoings which were not identifiable under the scope of the inquiry report. The Yi will explain more of it later. When accept option 1, there are 6 main renegotiation terms that need to be discussed and achieved. First and most vital one is that all projects shall convert their contract to take and pay basis instead of take or pay basis. It means the payment to the IPP will be made according to the amount of electricity generated by them instead of paying against the plant capacity. The internal rate of return allowed to IPP should be reduced from 15% to 13% at the fixed rate, under exchange rate of 148 rupees to US dollar, with no future US dollar indexation. Thirdly, delayed payment rate under the PPA should be reduced to LIBOR plus 2% from LIBOR plus 4.5%. Fourthly, to avoid irregularities on account of fuel consumption in future and to ensure that the actual efficiency is matching the efficiency reported in the financial statements, government will appoint independent consultant to perform a one-time detailed heat rate test for all IPPs. Fifthly, the operation and maintenance expenses, which is fixed cost payable to IPPs by government under capacity purchase price arrangement, will be shared by both parties on basis of half to half. Finally, the excess profits accumulated by IPPs during past years should be readjusted in outstanding debit payable by government to IPPs through specialized framework of agreement. There are several advantages brought by the new negotiation terms. The first benefit of term is that the government can save around 28 billion rupees annually through changing take or pay arrangement to take and pay arrangement, as the table 1 shown. Secondly, the excess profits earned by IPPs misreporting of fuel consumption will be finished. Thirdly, the fixed costs for operation and maintenance, which IPPs were charging higher than actual costs through misrepresentations, will be shared between IPPs and the government. The total excess payments made under the fuel consumption misrepresentation and operation and maintenance misrepresentation and the other fees work out to 6.22 billion rupees during the last 9 years, with expected future excess payment of 145.23 billion rupees during the remaining years of operations, bringing the total excess payments of 209.46 billion rupees to these plans. Thus, the government can save rupees 145 billion through this arrangement. Fourthly, the late payment surcharge rate at LIBOR plus 2% will reduce the interest rate on debit repayment, and also the renegotiated terms will reduce the overall cost of electricity generation by at least 50% and will help to ease debits to IPPs. The reduced electricity cost will increase industrialization and overall export of the country as well. Li Yi will talk part 4.
Hi everyone, this is Li Yi, and in my part, I will introduce the strategy that we are going to use for this renegotiation process. So we are going to adopt the defensive and offensive strategy. The first step, we are going to use the defensive strategy, which to directly negotiate with the IPPS. First of all, we are going to point out that the previous contract that we signed before was irrational to the current situation. For example, the currency that we still paid by USA dollar instead of rupees, and the extremely high profit for IPPS, but huge debt for the government. If the contract is not modified, the government will not be able to repay the loan to IPPS. Therefore, both parties will suffer the losses, and the future cooperation might be difficult to continue. This might be a threat to IPPS' future profits. Due to the fact that the great percent of ABC countries, individuals, and companies are unable to use electricity due to these high electricity bills, a large part of the country today faces a blackout lasting an average of 10 hours a day. The general public is complaining about the high cost for a long time. Thus, if we can use media to advocate that the government wants to lower the electricity cost through this negotiation, there might be a great public pressure to IPPS to agree to sign the new contract. At the end, we are going to claim what we want to change from the previous contract and the profits that they can still enjoy by applying the new terms to the contract. However, as our new term of contract to some extent damaged IPPS profits, they might not agree to sign the contract so easily. Thus, we may consider to shifting from the collaborating approach to competing approach because we value the outcome more than the relationship to IPPS. So the second step that we're going to take is offensive strategy. By disclosing irregulating behavior that IPPS had to strengthen our negotiation power and position. So if IPPS don't agree our term, then the following action can be taken against them because of the reported irregularities, which is considered branch under PPA drafted by the World Bank and the Penal Code of ABC country. So the federal government can undertake a forced audit of all companies with a view to establishing future wrongdoing which were not identifiable under the scope preliminary investigation by the Federal Investigation Agency. And this will include the forensic audit for IPPS to verify any over-invoicing in the project cost, fee usage, misreporting in financial statement, etc., hit rate audit for the field-based IPPS, and such wrongdoing are considered as breach of contract under PPA and the Penal Code of ABC country, and the legal proceeding can be eliminated against them. So at this stage, we believe that IPPS will be more likely to agree with the new contract. Otherwise, they will face a huge legal issue and penalty, as well as close their business in the future. And that's the end of my part. I will transfer to my colleague Wu Pei.
Hello guys, my name is Wu Pei. Thanks my groupmate presentation. Now I will introduce implement plan. I'm going to plan how long entire process will take and each major content and time. Implement plan all process require 13 steps include 2 prepare options. We will spend a couple weeks to form a renegotiation team to analyze the previous failed contract and find out the problem. According to the problem, we will find IPP-related background information and enter into the prepare option. We have 2 options. The second one is an alternative option. Prepare option 1 include development supporting argument and fact, make a budget, and explain the benefit if negotiation success. Prepare option 2, we will send an audit organization to collect IPP violation data. Both plan to do risk analysis. Then we are going to submit the approval. If option 1 is used, we will point out the previous contract and outstanding law issue, and then negotiation in accordance with the above negotiation term. When option 1 fails or doesn't work, we will disclose IPP irregularities, such as hit rate and furnace rate. Then we move on the final steps to sign the new contract and record the new contract into the system. We estimate it will take 126 days to complete. According to the above plan, we made the Gantt chart. This is the Gantt chart, which would be more clear and easy to see the beginning and the end time to each task. Our early planning and preparation takes a long time, you can see the chart, and the final submission of the plan will do not take too long. The Gantt chart will keep the process in order. So now let me groupmate introduce a conclusion. Thanks.
Thus, I will do the conclusion. The cost-effective power supply to the industrial hubs and spatial economic zones throughout the country is very crucial for increase the export and overall economic growth for ABC country. The above-mentioned negotiation terms and negotiation strategies are the most optimal solution for the cost-effective and sustainable electricity generation in ABC country. And the stated negotiation strategy has the full potential to address the declining economic conditions and reduce high debt of ABC country. And this is our reference. And thanks for your watching.